Hey, it's Ryan Prescott with Stock Market Starters, and it's been a while since I've actually traded or invested in my Starters example account. It's kind of a bummer, but one of the cool things about the stock market is like if you have things come up and you don't have time to trade or you don't have time to invest for a little while, like you don't have to, right? The stock market's always there ready for you to come back. Now I kept investing on my own, kept doing a couple of trades here and there, but I got really busy dealing with car issues, moving and all sorts of stuff. But I'm back ready to get started trading in this account again and doing some investing in this account. And I think one of the really important things to think about, especially if you've been away from the market for a while and you're coming back into it, I think something really important to keep in mind is like you want to come in with a good trading plan. So I'm going to come through and review and kind of update my trading plan. So we're doing a March 2025 trading and investing plan update. So let me show you guys what this looks like, and we'll kind of just go through, go through what this is going to actually end up being going forward. So hopefully you guys can see this, right? This is my trading and investing plan, just a Word document, but it's got all the important things in here, right? So starting, it's how are we going to fund the account? Then it's a trading plan and an investing plan. And that's it, right? That's what we need to know. Where's the money coming from? So money's coming from, right? Working a normal job. Perfect. Coming from my checking account. No big deal. How much, right? I'm going to put $50 into my trading account. I'll say, um, oh, yeah, perfect. $50 into my trading account, so $100 total a month. And that's going to be put in on the 1st and the 15th of every month, right? Perfect. So I'm on the 1st, I'm putting in $50. On the 15th, I'm putting in $50. And you can choose any amount. I just picked that amount because that's what, when I first started doing my own investing kind of, consistently, that's how much I had to put in, right? I was working part-time during college. And that's when I was just starting to do this particular type of investing. And I said, all right, this is as much as I can possibly do. And so that's what I'm gonna do. So that's where the $50 came from. My trading plan, right? How much money am I gonna put into each trade? And I like about $200 per trade, up to 250-ish if the stock costs that much. Just keep in mind there's a little cushion. So you go, let's say it's between 150 and $250 on an average trade, just depending on what the stock costs and what everything's looking like. I think that makes sense. What risk reward am I looking for, right? I want to have a risk to reward of at least 1 to 2. So that means if I risk $1, I can make at least $2. It doesn't mean that I will every time, but it means that that's the target profit is to make double what my stop loss is, right? Um, and for those of you who've done trading and who have done this for a little while, that sounds familiar. If you're new to it, don't worry. It's pretty straightforward. You just got to go learn about it. But risk reward at least 1 to 2, right? I think that makes a lot of sense. And then how many trades am I going to take each week or each month? I think at least 2 per month is fine. Up to $50 left in cash in my account. Sometimes I like doing this, though when I'm investing, I'm not as worried about it. So I'm just going to get rid of that. It's a little side note that I had before, but I'm going to take at least 2 per month, with the goal being to trade every week, um, right? As long as I see good trades, which is just to say, right, I'm not going to take bad trades just because I want to trade. So I'm only going to take good trades, but I would like to take one trade at least every week if I can, but at least 2 per month, right? I think that's a good goal. And then what types of trades am I going to take? I'm going to buy stock in uptrends or breaking out of downtrends moving up, right? So when I'm doing the trading, which is the short term, buy here, hold for a week to a month or even a day, right? And then sell. I want to buy stocks that are moving up in good uptrends or that are breaking out of downtrends, right? Those are really good places to buy trades. I think that makes a lot of sense. So that's a pretty good trading plan, right? Not a lot to update. But I think pretty good. So then moving from the trading plan to the investing plan, right? Where is my investment money coming from? Now, this I actually want to change just a little bit. I'm just going to caveat this because I think there's a better way to do this that just makes it simpler and easier to keep in mind. So I had it set so about half of my cash, right, which means the account value that I put in would be for investments. So half into investments, half into trading. Fine. I think what I want to do here instead is I'm going to do um, when I put in $50, right? So oops, not percent. I put in $50 on the first of every month. First of every month, I will invest that money. Right. So then, on the flip side of that is then when I put in $50 on the 15th of every month, I will trade with that money. So this I think makes it really simple. So on the first of every month, I put in $50, and on the 15th of every month, I put in $50. So from now on, what's going to happen is when I put in 50 on the first, that's going to go directly into investments. Now on the 15th, that's going to be in my trading fund, right? So I'm going to keep money for trading and I'm going to have money in investments. I think that's an easy way to do that. I've just found, that works better than trying to keep it split and running ratios. Now there's reasons to run it so that you've got, half your money here and half your money there at all times. And, you can do different things with that. But truth be told, I think there's a lot of value in simplicity. And so I'm going to simplify this a little bit and make it a little bit easier. And then how am I going to manage risk on my investments? So I said I'm going to look at things on the actual chart to determine good exit points, right? Things like EMAs, right? Exponential moving averages, things like support lines, long-term trends, stuff like that. I also want to focus on fundamentals. So even if a stock is moving down, but the fundamentals tell me, hey, this is a strong stock, right? It pays good dividends. It has all the cool things that I want. Then I want to keep a long-term perspective and not just sell out early. So I think that makes sense. Nothing to change there. And then what type of investments am I going to take? Right? I want to look at companies that have strong fundamentals, that are well established and that pay dividends. So I'm not going to buy into anything that's new, right? Because I don't want to deal with the risk of it being unknown. And the truth is, when things IPO, which was initial public offering, that's what happens when a company is first listed for public purchasing and ownership, right? To first be able to buy shares on the open market. It's called an IPO. But when that happens, there's a lot of times big fluctuations in price, right? Price will set a lot differently than it first sets up. And so when you're first beginning, and truth be told, even most of the time, I don't worry about that because you don't need to, right? Well-established companies that pay dividends and have strong fundamentals are the bread and butter that I really, really like those. So that's where I'm going to focus. And I think, right, that's a pretty good trading and investing plan. So not a lot of changes on this one today coming into March 2025, right? But I wanted to make this, set it up because, right, I'm getting back into trading with this account, with this plan. And I want to make sure, one, that the plan is good, two, that I remember and understand the plan. And then three, I want to be able to implement the plan, as I trade going forward. So pretty cool. Hopefully that all makes sense. Let me know down below if you guys have any questions, right? Let me know what I can do to help you guys out to understand this a little bit better. But hopefully that makes sense. We will see you guys in our next video. And until then, always remember, your financial future is in your hands. See you guys next time.